Good evening, everyone. This is Henry Gambell with simpleroptions.com, and as we get into tonight's discussion, or tonight's free video, I'm looking at the idea that the S&Ps are not really at a stance that I want to buy them. Now, of course, I'm taking this a day at a time, and anything could unfold, and we'll get into a couple other reasons why I'm cautious in the indexes here in just a moment. But essentially, as we get this week started, we had the shortened week because of Labor Day. You get the gap down, and continuation selling as we got into the actual meat of the week. Then we recover all of that back up here. When you get situations like this, especially in the indexes, I think it's a really good spot to watch for your gap fill. So whether you're looking at it with the extended session on, or a lot of times I like also using those shortcuts in Thinkorswim to get it to where they just stand out a little bit more obviously. But once we retrace back up here into 73.5, that's the next area that I'll be looking to see if I can have an opportunity to the short side. Of course, 73 is simply a level. It's just a gap fill. What is so magical about that? Well, it's not so much just the level itself, but when we get up into that point, then I'm also going to be very interested in what the VIX is doing. I've been keeping an eye on the 11 handle in the VIX for some time because I thought it was a relevant area as you had these retracements. Well, then we had these 3 days where I think equities got a little bit oversold. Obviously, that kind of shakes out that idea, but then you can see it immediately becomes relevant again. So if we get into that spot, the S&Ps have retraced that selling, and we're seeing that the VIX is still holding this level, that'll be one thing that I use to try and help work myself some equity short ideas. One other place to be looking is what has the daily squeeze of the yen done. Now, depending on how you're looking at this, and there's a couple different workspaces I like to use for this, but I'm going to come back over to what I consider to be more of a swing-based analysis of this, and when we're looking at the continuous contract, because this gives me the back data I need for this comparison. But notice how the 50, 100, and 2 are not only all trading below price, but also are stacked in a way that's what I refer to as just a mature bullish trend. Obviously, if you go back to the weekly, you might be able to argue that, but it's essentially to say the daily chart with the shift in these moving averages is telling us that the pattern is changing here. So if the daily squeeze in the yen can fire long, then I will look to that area in the S&Ps for that resistance to hold, and I think you can trade either of these. The S&Ps and yen are good through futures. You can also trade FXY or SPY to get some exposure to both of these, and that is something that I think will definitely be in play in the weeks ahead. So I hope that's helpful, gives you something to look at as we get into this next monthly expiration, and we'll update those ideas in the next free video.